All right, everyone, let's go ahead and get started. Welcome to the live stream. Why don't I get an audio check? You guys let me know how everything sounds, and then we'll get going. So, if anybody's new to the live stream, obviously this is, typically what I do is I'll just do some brief market analysis, give you guys my thoughts on how we ended the week, and then we'll look at charts and stock tickers that you guys want me to, run some analysis on. Try to point out some key opportunities for next week. So last week, obviously, sounds like the audio is good. Last week, obviously, we saw, kind of that pump, and really just pretty robotic. For sure. I was watching the 1 minute chart on my trading platform, and every single little tiny dip was just instantly snapped up. So it was pretty much looked like the algos, and really that's short covering as well. As things ramp up, the shorts are just covering. So that's what it looked like last week. Let me go into how we ended the week, and we will get into those charts. So triple Qs. Okay, so at face value, it is bullish for sure. I mean, you can see the last 3 weeks, pretty much just a strong bid in the tech sector within the last 3 weeks. We had this downtrend. This is the bear market. I'm looking at the weekly chart here, and we have this last reaction high right there, about 329, 330. Okay, so that could be a potential. That could be a potential area that we rally to in triple Qs. We could gap up there or something like that. I mean, let me see how far up that is. I think that's a ways up there. It's about 2 to 3% up there. Maybe we gap up there. That's possible. It would likely be sold into if you did gap up that high. We'll drop down to the daily chart here. And so that's that former reaction high. You really need to kind of keep that. I feel like that you don't really want to see that the market break above that, because if it did, then you're starting to create kind of higher highs. So you have this downtrend here. We have lower highs, lower lows, and we basically, you want to see this former high in this downtrend really hold to keep that downtrend intact. So that's one thing I'd be looking for sure. The reason why I don't think, at least at a minimum, we're going to just keep ramping up comes down to triple Qs. 40% of triple Qs is Apple and Microsoft. You throw in Nvidia and Tesla, Google, Amazon, and that's basically triple Qs. Okay. That triple Qs, the tech sector makes up, it's the most heavily weighted sector in the S&P 500. So even if you have a lot of other sectors rallying, if the tech sector's going down, just by the mechanics and the math, it puts a lot of pressure on the SPY, and pretty much will drag down the SPY with it. So that's why, I like to watch the big, these are the big dogs. These are the market leaders. These are what basically move the market. And yeah, that's what I'd be watching. So you'll see here on the FAANGs, we'll just go through those real quick. I know I put out that video, but something to look at. Okay, so resistance on Amazon. What I've got it right in. Let me just kind of clean this up real quick. I've got it right in this area. It doesn't have to be that exact line, but it's definitely right in this area. You can see all the little reactions here where we basically held support. So there's support. Let me see if I roll out, see anything else. Yeah, you can see there's kind of former resistance right through there. Just a big level. Big level. You can see lots of reactions there. Gap up right there. Let me see what we had. Big ramp candle. Let me zoom in. See that level? Big old ramp candle right there. So in general, I like that as a key level of just a key reaction level. And it has been resistance for a while. We also have this island reversal candle here signaling that, a reversal is started to the downside. And this rally has really just brought us right into that key level of resistance. Okay, so that is all that I see on that one. So we'll watch that level. Google. Again, Google right there at resistance. All right, there's your downtrend line in the bear market, and we've rallied last week, pretty much just right into that range or zone of resistance. I've got kind of a dual range of resistance right here. So that's it. And negative divergence. You see the PPO. So what I'll be watching for me, I really want to see these crossover. I want to see that bearish crossover. All right, that's what I'm looking for next week. If we don't get that and we just continue to ramp higher, we're going to burn through these divergences. So that's the risk, guys. There's always risk in the trade, right? I mean, we any trade that I put out there, I'm anticipating it to go a certain way based on what I see in the charts. If it doesn't do that, then I'm wrong, and that's the point. Each trade is conditional. So anytime I point out a trade, it's really conditional on expected behavior, what the chart is telling me, and then looking for that expected outcome. So I'm seeing this at resistance. I'm looking for that bearish PPO crossover to help confirm the negative divergence. You can see the RSI is already turned down. So yeah, that's what I'll be looking for on Google. And then here's the other class of shares for Google. Pretty much a zone of resistance. They're above it just slightly there on Friday, but just towards the end of the day. Nothing, can't really say that's like an impulsive breakout. Downtrend line there, zone of resistance. And again, really looking for that bearish PPO crossover right there. Just all we're really looking for is something like this. See how that did that crossover? Okay, so you get that, and when that crossover comes, then you get these down legs. Okay, especially with the divergence. All right, and this doesn't really have divergence on it because you'd have to break above this high right here. So there's not really negative divergence on it. There's just kind of a downward trend in momentum. Let me double check that though real quick. Yeah, no divergence there on the daily. Let me go back to the other Google. Yeah, see, they just fell a little short. You had some prices right in here, some prints right in there, and then the rally here, you fell just a little short. So I can't say that's divergence. So we'll see how next week plays out. I mean, obviously, we could start to break out in these. You could. That's the thing. If we break out and start to rally, we're gonna burn through these what might be a divergence. No divergence there on that one. Amazon, no real divergence there on that one. But Apple definitely has divergence, and that's the big dog. Doesn't mean it's confirmed though. So that's the one thing is like, see the PPO, it's pointed up. All right, and so we have divergence, but it's not confirmed. If this just continues to rally like that, we'll burn through the divergence there, and it'll look like that. And then all of a sudden you don't have the negative divergence on the daily chart, and you've got, it's just bullish in general if you see that. So as of right now, I don't think that's going to happen, and here's why. Look at this trend line on Apple. All right, so I'm looking for Apple to start to roll over. Let me kind of clean it up, but you can see right there, this is basically the bear market that Apple's been in. Apple topped back in January of 2022, and then it's been making these kind of impulsive waves down. I mean, you can see wave down. The dip buyers are there. Dip buyers love Apple. All right, rallies up. That's a bear market rally. That big, strong rally right there, that in Apple was a bear market rally. And from the lows, let me check. It's right around in here. From the lows to the highs, about a 20% rally. So 20% upside in Apple did not usher in the start of a new bull market. And you go back and look at the comments in my videos and stuff, and I don't remember how I think I was long back there, but we'll see. For the rally at least. And then, but it wasn't the start of a new bear market. In fact, it was a bear market rally followed by a 27% drop. Okay, then you get another straight up rally. This is what bear market rallies look like. In this market, look, they just go straight up, you know, very impulsive, strong rallying is bear market rally behavior. It's you know, it's the dip buyers and it's also shorts covering. All right, it's kind of a combination of both. And then sure enough, you get, you know, down. There's another bear market rally down. Okay, so this doesn't look any different to me. I mean, obviously, it's just rallied right into that resistance area. So it's a very obvious trend line. We're right there at it. I can see them trying to pop it a little bit. That's completely possible. So let's keep an eye out on whatever we see around here, because whenever you get to a key area of a key level, there's always games usually being played by the market makers. This is where they look to get positioned. Well, to get positioned, if I'm a market maker or a big fund and I need to and I want to short, I want to short at resistance for sure. You know, that's what you want to do. You short at resistance, you buy at support. Okay, so people that are buying and they're chasing, a lot of the retail people, they get bullish when they see this price action. They follow the news, and this is when they're buying. It's chasing, you know, basically. They didn't want to buy down here. They want to buy, you know, they want to buy maybe somewhere up in here, or definitely up in here for sure. And so it's chasing. Well, we're at resistance. So now if I'm a big fund, this is where I want to short at. But if I need to take a large position and move a large amount of cash, one way to do it is to get shorts to cover, and then you can sell into that. So you create volume basically by popping key levels and kind of chop around and create volume, take a position over a couple days, and then once you have your position, then, you know, then the thing will roll over. That's how the institutions do it. All right, so we're at resistance, and again, negative divergence, not confirmed. So let's wait for this to confirm. See the RSI still pointed straight up. So I need to see these things starting to turn down. That is critical. Okay, so we'll definitely be on watch for that next week. But if we start to see it, and let's say the PPO, we get a sell gap down or some maybe Monday or Tuesday, and this thing starts to roll over, you can bet I'll be talking about that on my videos. Okay, guys, that is most of the FAANGs. Meta doesn't really move the needle as much anymore, but bearish rising wedge, they kind of, you know, pumped it towards the closing of the day, but, you know, basically bearish rising wedge, negative divergence, and, you know, kind of, it's confirmed, but it's kind of chopping around a little bit. So, all right, so that's what I got on those. Hopefully you guys understand at least the case I'm trying to make. Of course, I can be wrong, so don't be surprised if it rallies and I admit that I'm wrong and say, hey guys, I was wrong. Because at the end of the day, I don't know. All I know is what the charts tell me, and I stick with trades when the charts tell me a certain thing. It's very similar to playing like blackjack, or if anybody's aware of blackjack and card counting and all that. You know, when you have the odds in your favor, let's say you have a face card face up, then you have a higher probability of hitting a blackjack, and so you have a higher probability of winning. And that's basically how trading is too. You know, right now I feel like being short, I have a higher probability of winning this trade than I do being long, and but there's no guarantees that's gonna, you know, be a winner. So, all right, let me start at the top of the list. I'll just start, you know, working my way down. We'll go for about an hour, and then we'll get wrapped up. UNG, we can look at nat gas. I've been looking at it. For me, I'm just still kind of a no touch on this one. There's UNG. I was looking at that. I saw that someone mentioned in the comments that it was breaking out on Friday, so I took a look at it. This is what I have on UNG. So yeah, maybe it's not that impulsive really, but you know, there's a downtrend line on this hourly chart, bullish divergence, you know, breakout. So I don't know, maybe it comes in and back to us and then actually can rally. I'm not exactly interested in this one quite yet. Let me look at the futures. Excuse Excuse me. So the futures, you got something like that. So yeah, I mean, you could say it's a breakout. It's just not super impulsive. Let's look for some follow through. All right, let's look for some more buying to usher in that. But yes, I would rather be looking to go long than short. Look at that bullish divergence right there. So this low that was just made is an equal low from there, but nice clean bullish divergence. That can continue to build for a while. What I really need to see is some sort of a buy signal, and this could be it, but it's not enough for me. I'd like to see something maybe a little more impulsive. So, yeah, I'll be looking for confirmation. If that's a buy signal, then there should be confirmation, more buying in the next candle, and maybe that is our confirmation. And then this thing can probably run, so we'll see. All right, so that's what I got on that one. And then we go with Vale. So, this is an inflation trade. It's iron ore. Let me kind of clean my charts up as I go along. Nah, I don't have much on this one. As of right now, it looks like it's in a downtrend, and that downtrend is continuing. Let me kind of clean that up. See that? I've got one reaction, two, and then this is a third. See it break out, but it failed and closed back under there. So I'll go with that trend line, and we'll just say this is in a downtrend. No divergences to tell me otherwise. So that's it on that one. CVS. We covered UNH already, so we'll look at CVS. Again, I've talked about this one. There is some bullish divergence showing up on the daily chart on the RSI. The PPO, you've got this bullish crossover happening now. You're at a decent range of support right in here, but I'd still be looking maybe for some divergences. I don't have bullish divergence on the PPO. I think maybe it could kind of grind around and then come down, make a new low, put in that divergence on the PPO. Then I'd look for some sort of a recovery back over the 74.50 area as my buy signal. Okay, so that one still has some work to do. FuelCell, FCEL. Let's see here. Looks like bullish divergence didn't quite get down to put in that new low. It's slightly higher. So, yeah. I mean, it kind of looks like it wants to rally, but again, I don't have a super clean trend line. I'd probably have to go with something like that right in there. And I think we're still within the downtrend. I don't see divergence, and there's no buy signal. So nothing on that one. Silver futures. Right, let's look at the silver futures. Okay, so you've got divergence right now. You'll see that we're making a equal high in price as kind of these former clusters. That's a big range of resistance, and we're kind of right there at it. We have divergence. It's not confirmed. All right, so that is something to keep an eye out on. You'd want to see that turn down to help confirm. Otherwise, this can just continue to ramp. Silver also does have the ability just to moonshot. It can do that for sure when it wants to run. For me, what I prefer to do is watch gold. And the GDX, well, the miners, if anything, kind of signaled a sell signal on Friday as they'll start to break down. And then this one has negative divergence, the gold futures. Not confirmed on the PPO, but you can see the RSI starting to turn down. All right, so a higher high from the former high, lower momentum. That's negative divergence. So if the PPO starts to turn down and confirms, then yeah, I think this is probably going to correct. Looks like it's starting to, but we'll see. So I'd watch gold as kind of the guide for silver. When gold wants to run, silver can run too. Yeah, that's the thing. People are saying, you know, analysts and strategists on TV basically will say it's a bull market. Maybe it is a bull market because, you know, they go by like the 20% up definition. But again, just like I showed you in something like Apple, you know, Apple on your daily chart, I mean, you rallied each one of these bear market rallies. Like this one was 34% rally, pretty much straight up. And was that the start of a new bull market? No, it wasn't. But the strategists and analysts would tell you that it was. And, you know, so what they're alluding to is that, you know, it's all right, multi-year bull market. And when reality is we don't have enough evidence of that. So it's the same with the triple Qs. All right. Apple is the triple Qs. Basically, it's a huge chunk. We have a rally right into resistance. That's it. And we have negative divergence. Not confirmed, but once we start confirming, or if we do, then we're going to have a rally into resistance with confirmed negative divergence, which will have a higher probability of failing, which would most likely usher in the next leg lower in the bear market, which I would presume gets down to this 112.50. And ultimately, I think we're heading back down to this range. Look, there's a bull range that was started back in 2010. All right, log scale, if you guys aren't using that. Here's the Fed and COVID and getting crazy. So they've pumped it. All right, so I think we're going back down to the range, the long-term range. Pre-COVID highs right there. To me, that just seems like such a perfect target, down to 81-ish. And likely going to happen over the next, you know, year and a half, or I don't know how long it'll take, guys. That's the one thing I don't always anticipate. But you can see by the chart to get down there, it'd have to be, you know, maybe by the end of the year sometime, or, you know, February of next year or something like that, maybe. So that's it. I don't think it's a new bull market. Not enough evidence yet. All right, morning from northern Minnesota. Must be cold up there still. GE and ELF. Well, I'll cover GE. I think I've kind of looked at that one recently for a potential trade. Let me see here. Okay, so you have negative divergence. You've got this, looks like a bearish rising wedge. I'm going to have to adjust it, though, because it's kind of been holding that. So we'll just adjust it. When something's so close, you might as well just adjust your line to give you a more clear sell signal when something shows up. So that's what I have. We'll go with this bearish rising wedge pattern with negative divergence. No sell signal. Need to see this break. There's some support right in here. So I think that 89.80, but I think you break, you hit that first support level, probably get a minor reaction. Ultimately, you start heading lower once you get the sell signal. We need to break that trend. I don't have anything there telling me to short it yet, although it looks like it's, you know, it's going to be due soon. So we just wait for the sell signal. Let me know in the comments if that fires off, guys, if anyone's watching it throughout the week. And I'll put an alert on it too. But WEAT ETF. We can look at WEAT. We'll start off with the futures. We always look at the futures, especially in these commodities. It still looks okay, guys. I don't see any reason to get out of my long on this one. Joe was a little frustrating. I know on Friday it kind of gapped down, but it still held. It still looks okay. In general, on the daily chart, we have gigantic bullish divergence that's been building for quite a while. You know, that's a divergent low. I think that's probably the last divergent low. It's hard to say, but I don't know. It just kind of feels like it's probably the last. This correction's gone on for quite a while. And I do believe we're going to start that next leg higher. It's not going to go like this, guys. This is that Russia kind of blow off top, all right? The reality is inflation had been running this since 2019, but, you know, all of COVID, commodities had already rallied you know, from the low to the high, this one had rallied up 80%. And then Russia, this is Russia here, the Russia war. That's another 80% just in that. But we'd already rallied up 80%. So inflation was already a problem. So now we've corrected, and I do believe we are going to start that next leg higher in what looks like an ongoing bull market. But don't expect it to just shoot up. It's going to work its way higher. Bull markets climb the wall of worry. They grind higher, you know, consistently. They don't just shoot straight up. That's more like a bear market rally. So that's the futures. And then when I look at WEAT, the ETN, see again, I mean, look, I've got this trend line right here. Lots of reactions there. We broke below it a little bit, but we did it with bullish divergence. To me, as of right now, this looks like a bear trap, like a false breakdown. This is where the institutions who want to go long wheat would want to be buying. You break down a key level, get the shorts to, you know, or not the shorts, get the longs to sell. You take their positions, and now you can run with your position. So we're just right there, right at support. Don't worry about it just being slightly below my line. Again, it's close enough. We're just counting pennies here. So I still like it. I think it's going to rally maybe next week. We'll see. Merck. I'm not in this one right now. It was, you know, we hit that support right there, and it rallied into the resistance, started to sell down. I think I got out of the position just the other day right there, and was just like, I mean, it's fine. There's just, the juice just isn't quite worth the squeeze on this. And again, this is a big healthcare kind of thing. It's a steady Eddie blue chip stock. So I do believe it will work its way lower, but I'd rather apply some capital to the sectors that I think are going to move more, which is right now semiconductors and tech stocks. So far, they have been moving more, definitely in the opposite direction of what I've thought. So that doesn't feel good, but, you know, name of the game. All right. So that one's that. And then LLY, I saw was kind of hanging, you know, kind of starting to break back above the 200. And why be short, you know, on that one? We shorted it right there, I believe, and it back tested, caught that move down, most of it. But yeah, I don't know. This might want to run up and test that trend line again. That would be the area I'd want to short at, right up in there, if it can get back up there. So nothing going on with those, really. Okay, what else do we have? TMF. What's TMF? Treasuries. Yeah, I mean, this is like your long 20-year treasury, so your long bond. Rallying, obviously, so the market is buying this. Not enough information to go off of, but we're moving up. What's TLT doing? This is the one I usually look at. Same thing. Into the 200-day moving average. That's not anything I'd go off of yet. What's TNX look like? Here's your interest rates on the 10-year. Interest rates falling on Friday. Obviously, that's why tech was rallying. But, yeah, I don't know. Same thing as tech. You see this almost looks like it's about to do a bullish PPO crossover like that, which you'd want to see rates rise for that, which means the market would be falling most likely, especially tech. So just like this needs to do a bullish PPO crossover, the market in triple Qs needs to do that bearish PPO crossover. So we'll watch this stuff. I don't trade the TLT very often. Every now and then I'll grab it, but you have to kind of load up on it in order to make any real money. Okay, I covered some of those silver miners, and I talked about the gold miners, so we're going to skip through those. Baba, I know that one's been rallying. I'm not on it right now, but see, just with my style of trading, I just didn't see enough in the chart on the daily at least. I'm sure the hourly had some bullish divergence, but on the daily, I just didn't see enough to tell me that I wanted to go long. There was support right here at about 85-ish. Dipped below, recovered it, and obviously just off to the races. I don't know if this was a news event or something came out there, but a pretty big move, pretty big gap up there in a single day. As of right now, I mean, you can see there's some negative divergence showing up on the hourly, just starting to, so you're probably going to get some sort of a pullback. Doesn't tell me that it's going to be a long-term correction or anything. It just tells me a pullback within this hourly chart. This chart's kind of messy, though. Oh, not the fib. There's not a whole lot of data points. I'd maybe go with something like that, and you could see a pullback to a trend line. Again, not a clean trend line, though. I only have a couple data points, so you know, there's a gap to watch. I don't know. I could see a pullback. I wouldn't really press my luck. You know, if you got a pullback, that's probably about as much as I'd be willing to. If I was going to short it, that's as much as I'd be willing to go. I'm not going to short this, but I also don't want to be long. Not there, at least. You know, here's what I think. I think maybe in the short term you get a pullback, but then maybe a continued upward move. That's all the chart tells me right now, but this will do what the triple Qs is doing most likely. We'll see. Okay. Yeah, the VIX. Yeah, well, that's the thing. I mean, Apple and stuff is right at resistance. So here's the VIX. And on the VIX, we do have this bullish falling wedge, breakout, backtest, rally, come down again. You know, so if it wants to hold the bullish divergence, it pretty much needs to rally right around here. It could go a little lower, but in general, you know, you'd want to see this start to rally and off to the races like that. That's probably the move I'd be looking for if you're going to get a drop in the markets. All right, what else do we have? We've got Tesla, stocks. We'll go into the semiconductors. XLRE, that's our real estate. I have been looking at the Homebuilders to see if we're going to get some sort of pullback, but again, they're really interest rate sensitive. So that's the trend line I have right now. I've got a couple reactions, 1, 2, and if I roll, let me kind of tighten this up, just kind of come down here. It's about there, okay? We'll put that as a reaction. Broke out, back tested, failed. And this is a rally into resistance. That's how we're going to treat that, okay? So I suspect you get rejected on Monday or hold about in this area. They might play games and kind of like, if they can kind of break it out just a little, it won't be impulsive, and that will tell you probably a false breakout and it's going to roll down, you know, if you see that. But obviously if you see a big impulsive green candle, then that's a different story. Maybe there is a breakout, but right now I'm going to say we're at resistance. Right. Sucks. Semiconductors breaking out above that former resistance on Friday. It's a divergent high as of right now. Not confirmed, but negative divergence. You can see we're breaking out, but there's not a lot of momentum on this breakout. I mean, for one, that's only a 0.5% move breaking above that former high. That's not believable. All right. And, you know, to see, I don't know what my volume was. Let me see if I can throw that up there. That one gets deleted sometimes. Because when I'm deleting lines and stuff, I'll delete that. I probably need to figure out how to lock that in. Yeah, see, no real breakout volume, so not a believable breakout, but price action, it was a breakout. And that's why the bulls, I get a lot of comments. It's funny because I get tons of comments saying, oh, things look bullish. I'm like, yeah, if you're just looking at price. And if you're just looking at price, let's not even look at candles. Let's just look at a line graph on CNBC or Yahoo or something. And again, price is, feels bullish, but the other indicators will often give us clues onto where the market's heading in the future. And that's how you make money, by, basically analyzing and predicting where the market's going to go into the future, putting your bets down and getting it right. If you think things look bullish because price is going up, but you're not able to predict the future, then you just ride it up. And if it goes up, you're happy, and if it goes down, you wonder why, and you're sad. That's not productive. So there's your breakout, and it's a 0.5% breakout. Not believable. It's a divergent high, not confirmed. So obviously I can see this. They might try to hold this for a little bit, but look for that bearish PPO crossover to help confirm the divergence. Once you see that, it's most likely this is going to fail and break down and probably do that. So that sucks, and that's the same with pretty much all the semiconductors in general. The one thing is, like, Nvidia obviously has been just on a ramp, and it's just, on a tear. It's coming into some resistance. I probably can adjust that, but I got some resistance right there. So I don't think we're going much beyond this 285-ish. Again, the reason being is, if we're going to continue a bear market, this is the high back in November of 21. Okay. And there's a kind of a former high. I like that as a former high. So if this rolls over here, or, right around there, it's going to put in a lower high than there. So I like that for... So that's I like that as a potential, not making a new high and keeping the downtrend. All right, so that's Nvidia, obviously negative divergence, and I mean, look, not confirmed. See what they're doing? It's like, was about to confirmed, and it had one little last breath, and I think it's about to roll over like that. Okay, so watch for that. That's important. That will be a new development that would be important in in the bearish case. And then the other thing is, I'm in this one, AVGO. I've talked about it, and it literally hasn't really gone anywhere. I mean, I'm down, I think, about 0.5% on the trade, and I've just been sitting in it for, ever since this back test right here. I believe I grabbed it right there. That was the beautiful back test, and so yeah, I'm down about 0.5%. So I grabbed it somewhere right in there, and that's it. So negative divergence. See, it's confirmed as well. See the momentum bearish crossover. So yeah, I like it. I think we're going lower, guys. And if this one goes lower, it doesn't mean the semis have to, but this is a big one in the semis. This looks like a good chart. All right, let me move on. Ulta. Let me look. Yep, negative divergence. I'd be looking for a short. This will go down if the market turns down. It's hard to say exactly if this is the trend because I only have a couple data points, but it did break, and look, it was kind of back testing. Let's check this. Yeah, it got rejected right there. So I'm going to stick with this, and this to me looks like a ramp. Now it could ramp all the way into that trend. Maybe that's possible. And even if it did that, you'd still have negative divergence. So, because that's a big negative divergence there. So I would say, for me, I don't want to be short here, but I also don't want to be long given the divergences and the potential that this is a breakdown of a trend line. But I would want to short if it could backtest that trend line. That's a beautiful short spot with this divergence, and you would likely get a nice move down. So that's how I'd be, it'd probably go like this. You'd bounce, like that. Something like that is probably how it'd behave. HBM. Let me just kind of. Yeah, I don't know. You're coming off a divergent high. There's your negative divergence on the daily. There's your divergent high. There's your move down. I think you're in a downtrend. Yeah, I would treat this as a downtrend. I don't see any divergences tell me that this trend's over. And so for me, I mean, yeah, you have the, that's not a, I can't draw that as a trend line though. That's the point, because I only have 2 data points, you know. So I don't know. I can't quite define a trend, but I would say it's still in a downtrend. So I treat it as such. Which means sell the rips or whatever. I'm not interested in this one. Let me move on. CLF. Trapper, you put out like 10 different picks. We try to keep our picks to 1 or 2 so I can get to everyone's. That's just one thing that I usually tell people. But thanks for joining. I know maybe you're new. Tesla rally into resistance. I think Tesla could continue higher, a little higher, only because it would make a good short setup. We don't have to get that. But here's some resistance there. See this? Former support. Resistance. Okay. Just a little pop up to the 200-day moving average, which is right here. All right, that would be another move of about 3.8%, you know, maybe 4% in Tesla. And if you get that little 4% pop, you're going to have a new high over these former highs. It will be a divergent high. Okay, so you look for that and get that divergent high. Then you look for the bearish PPO crossover to confirm the divergence. And then most likely Tesla's going down. And we'll wait for a sell signal, which as of right now, I feel like is a break of this trend line. Okay, so that's what I think how it's going to play out. I think you go bop, grind around, drop, get the bearish PPO crossover, grind for a little bit, break, sell signal, down she goes. Okay. And Tesla's got a ways to fall. So we'll see if that's how it plays out. That's what the chart tells me how it likely could play out. Okay. MPW. Yeah, that's got some fundamental stuff. I don't know about that. SMAR, I'm still in that one. It's okay. It looks fine. It still looks like a short. It's just a matter of when does the turn happen. All right, bearish rising wedge, breakdown, back test. They're still holding on to it, but it's losing its momentum. And I think it'll probably be next week. We'll see. Negative divergence. You know. So again, here's the way I look at it. It can pop up to this trend line. Even if it does that, it's just a divergent high. It would likely get sold into. So, you know, the upside's limited, all right? And I think the downside is going to take out these lows, head down to this level, 35.50. You're likely going to get a bounce or reaction there and ultimately fill this gap down at 33. So I look at things in terms of risk reward. The risk for as a short, trying to short this thing, that's about a 4% move to the upside. So I have to ride that out. But I got a 27% move to the downside, potentially 33. So yeah, that's how I'm looking to trade this. And I'm only down, I think, about 3%. So yeah, I got to get a little room. You know, if I'm going to try to gain and get a 30% drop, I should be willing to give it a 7% move against me. Risk reward ratio on that is what, 30, it's about a 4.5 to 1. That's a good risk reward ratio. So that's the way I view things. All right. CS. What's CS? Credit Suisse. I'm not touching this thing, guys. First off, this is the move's been done. It's all in the media. It's all in the news. I get texts from people about some of these collapsed bank stocks. It's played out. All right. It's in the chart. All right. The news is in the price. The opportunity is gone. As a short, you want to, well, I mean, this thing would have been a short for a while, but shorts are covering on that kind of a move. So there's no short move there. And yeah, there's just no move. There's no play here. So we move on from that. Affirm. What's the symbol? AFRM? Yeah. Well, he's starting to show a little bullish divergence here. That was a divergent low on the daily. Looks bullish to me, if I had to guess. I wouldn't want to short this. It looks more bullish than anything. Like you got some resistance right there. Okay, so it looks bullish to me. It's probably going to hit this resistance 1202. And then you get some sort of a pullback or a rejection. But in general, it looks more bullish than anything. So notice, though, this is interesting. See these lows here on the daily made lows? These couldn't quite get down there. So you didn't have a divergent low. If that made a new low, then you'd have big bullish divergence on the daily. You don't quite have that. You just have this little divergence right here. So I would, the divergence isn't that large. So what I'd be looking for is, as of right now, I'd probably only be looking for a move up to about that $12, 1205-ish area. That's probably about as much as I'd be willing to let that go on the long side. And then I'd probably wait for different opportunities, a bit better setup. I don't know. Could be wrong, but that's what I got so far. PANW. I know I've traded that one in the past. Yeah, see, it's a divergent, it's negative divergence. Guys, the whole market's set up to drop. I mean, it doesn't mean it's going to, but I mean, I just see the charts like this, tech at least. And you've got a upward trend line, all right, several reactions there. And look, once it broke, like even if you didn't have this trend line, like let's say you just drew this trend line out like that, and you're like, okay, and this price hadn't happened yet. You're basically watching this. You're like, okay, that's a trend. Still holding. Oh, it broke, but it didn't impulsively break. It just kind of drifted. And then it's like back testing, So I think we're near the end of this move. Could have another day or two of a rally, but negative divergence. And I'd be looking for this thing to start to roll over. One way I play these, sometimes you'll see that do this little back testing action where the bulls are just really trying to hold on, but the trend is broken. It's just kind of a last final move. Especially, this is usually the bag holders because you have a bullish trend here, okay? So you should be bullish in a bullish trend. As long as you don't have divergence showing up. And then divergence starts to show up. And, you start to... This was your first divergent high, and this is another one. So at this point, as a bull, you should be like, okay, we broke trend, and we have divergence, and now I should be looking to take my profit. All right, so these are going to be the bag holders, the people that don't know how to read charts, aren't watching my analysis or whatever, and they just see price action. One way I trade these, I'll go down to the hourly and I'll look for a secondary trend line, some sort of secondary support, something like that. And then my sell signal would come on a break of that trend line. So you want to short on backtest into resistance or breaks of support. Okay, so you break that would be a sell signal, and that's how I'd probably play this one. And then look for these gaps to fill. There's a big gap right there. Look for that gap to fill in the 200. I would say that's a nice target. And that's about 169.50-ish. Potentially a lot lower, but at least there. What do I think about pins? Pinterest. At first thought, looks like a basing pattern. That's kind of my first thought. Potential bear flag, but it's kind of a big flag. It's diverging though, that's the problem. So I wouldn't be bullish here because see the divergence? Each new high, it's just confirmation that this is diverging. Each new high, okay, you can make a high. See that little high? That's a divergent high. Came with the sell-off. Make a new high. That's a divergent high. Came with a sell-off. Make a new high, which is right there. Divergent high. Came with the sell-off. New high. Every single little new high that it's making has been a divergent high. And those new highs are followed by sell-offs. And there's another one. Started the selling, but I would look for more selling. So, yeah, that's what I got. And then, you know, you probably have some sort of a trend line. It looks like it's trying to establish some sort of a baseline. We'll go with that one. All right, good probability we're heading down to this trend line here in the 200. Whether we break or not, I don't know. I think there's a good probability we break because this divergence on the daily's been building for a while. So I do think it's going to break. And then when you break, you're probably going to go at a minimum, make the lows here. Let me kind of grab that one. Somewhere right in there, you're probably going to head down to these lows. Yeah, and that's about as much as I'd be willing to call it. And you obviously have these lows way down here, so maybe, but I don't know. That would be it. Those are the only real levels. See that support? Let's just tighten it up right there. You break that, you're heading down there, and that beyond that, who knows? Bankruptcy maybe? I don't know. All right, let's see here. Gold, GDX, Micron. Micron's a semi. It was one of the stronger ones, but it's a semi. TT is a nice short setup. Well, let's look. Yep, it is. This is a bearish rising wedge. I can almost see it. Something like that. It's a big bearish rising wedge. We're right in the middle though, so it's not any area I want to take a position in. If you rally into resistance, I want to short there. Or if you break support, I want to short there. Negative divergence on the daily, it just keeps confirming. So I want to short up here. I want to short on a break of this. In between, I'm not interested. So, but it is a nice short setup. We'll add this to our watch list and just, you know, I need to get it around a key level. So we're not there right now. But if I was short here, it's like, you're probably going down, I guess, because you just hit the high. So usually when you hit the high, you go down. So I'd be looking for a move to hit this, and then we'll watch it. Yeah, that's great, Renaissance Man. He says he's got negative divergence in his sex life. All right. Well, that's funny. Shop. So your bullish divergence was down here. Looks bullish to me. Man, that's that. You have a trend line. It's like it's really choppy. I don't know. Looks bullish to me. I don't want to short it. As far as I can tell, you're probably maybe you're going to go up to these highs here. It looks bullish to me, so I don't see enough to tell me to want to short that thing. Have to keep an eye on these. You know, these are the Cathie Wood stocks. It's like an ARC. This is just the risk on stuff, so have to keep an eye on these for, you know, I'm trying to short tech, so. Looks bullish to me, these do. I don't have any divergences. I have a bullish trend. I don't know. That looks bullish. So again, the things I'm watching for, obviously on large cap tech, I'm not shorting the small stuff. I'm really more shorting the large cap tech. So you know what I'll be looking for next week. And if I don't get that stuff, then I'm just wrong on that. But let's see here. FSLR. Yeah, you know, that one, it's on my radar, but it's not. It's just, you know, it's in this steady march higher while diverging. Each new high has been a divergent high in this thing. It's been strong. So at this point, what I'll be waiting for, I'm not interested in it until I can get, and I almost want to move this trend line just a little bit, but I'll be waiting for a break of this lower trend line here. Once you get that, I think you're going to get a nice long tradable trend that brings us all the way down to fill this gap over time. Okay, over a good amount of time. So I think there's a nice trade here, but in general, I need to see this trend line break and a sell signal. It'll show up eventually. Hey, Magic Production, thanks for the super chat. I appreciate that. You want me to look at snow and car? All right, well, we'll start with car. This is one of those hype stocks that the COVID people were involved in during the mania. It's got this big sideways range, doesn't it? Top of the range. I think the bottom's right about there. That looks pretty decent to me for right now. We're going to get rid of this. Well, let me see. Oh. Still enough reactions on that one. We got a little trend right there. Oh. There's my levels. Levels to watch. Right now it's in the sideways range, so I would just watch the levels. You've got 202.44, 245.35, 322.05, and then down here 144.48. So you looks like you get reactions on those levels. You know, right? You know, I don't know which way it's heading though, to be honest. So it's more of a trading instrument, I guess. At key levels, maybe. Right now, the momentum's trending higher, so I guess this maybe price goes higher. 243.44 is likely going to be that's a big area of resistance. So if anything, that would be the target. If it's going to continue higher, I would put it there and probably not. I don't know. Could get up there again, but who knows. And then snow. Looks bullish. I mean, obviously, you had a breakout back test. That's a nice ramp candle. At the 200, so you're very likely going to get some sort of reaction. Okay. I think it's very probable you're going to get at least a pullback down to about 148.12. It's kind of your former react. That's probably where the buyers are looking to step in. But in general, looks bullish. So I don't know, maybe this, and it looks bullish. You take out the 200 and you're probably going higher. So this is kind of an ARK stock as well. These things got decimated, so it would make sense that they're going to have some sort of a rally. I'll keep an eye on these. All right. I've got, I'm going to do one more, guys, and then I'm going to wrap up. So my thoughts, obviously, I think we're going to get that pullback. I don't like seeing some of these little speculative tech stocks looking bullish. Could be. But the thing is, a lot of the time, usually the end of the rally, the large caps will lead, especially in tech. The large caps will often lead the rally, and these little speculative ones will they're like the cleanup crew of the mania, of the speculative bullishness. So if you have a bear market rally, it happened the last bear market rally. Excuse me, guys, had a tickle in my throat. The last bear market rally that we had, the large cap started it. Then you saw like the GameStops and these smaller ARK stuff. They kind of rallied, and that was the end of the rally. So maybe that's what we're seeing, is we've seen the large caps rally, and now we're going to see these little ones kind of do their rally thing, and the large caps maybe start getting sold into, while these kind of do the wrap up of the bear market rally. I guess that's the way I'd be leaning as of right now. I covered SMAR already. CAT is, we can look at CAT. I think it was at resistance. Let me look. Yeah, it started to break above that resistance. So you're probably going, I don't know, maybe you're going up to this next level. Right there at 237 is kind of your next level of resistance. I would think it ends there. All right, if it's going to rally, and then down we go. I played this one pretty good. We shorted it at there, caught that. It rallied, shorted it again, caught that. Took profit, and it rallied. I didn't short it here because of just how the broad market was looking. So I just kind of wanted to hang tough. Broke out. Maybe you want to rally up to this 237.84 before continuing the bear move down. I don't know. That's how I'd be treating it. Right now, I don't have a position in CAT. Yeah, Bitcoin does go down. It is obviously, Bitcoin's to me about the same as like some of these ARK stocks, like Bitcoin and GME. You can kind of look at that. I mean, look, GME, there's your downtrend in GME, and it's just been a nice, clean, organized, structured downtrend. But what GME does is it does these huge moves. It catches people off sides. So with GME, to me, for one thing, my broker doesn't let me. They always restrict shares on this whenever I try to short this, because I did want to short it right here, and my broker didn't have any shares to borrow, so I was like, okay, we'll just move on. But so this one, it's all about key levels. You got to get your entry right, because what they like to do is these gigantic gaps, and on either side of it. So, but going back to Bitcoin. Rallied into resistance. You can see some resistance right here. See those lots of reactions there on the daily chart. Then a gap down and a flush. Lots of reactions in the past. So we are, and if I extend this out, see the reactions there. So I think we're at a key level of resistance, very similar to like Apple. You can see it's been struggling, so clearly there's some sort of resistance there. We've been kind of just going sideways. We have negative divergence and it's not confirmed. Okay, so again, just like the triple Qs, this looks basically the same. We need to see these divergences start to give us that bearish PPO crossover to help confirm. And that's what I'd be expecting. All right, so I'd be leaning that way. You start to see this stuff. It's just, that's going to give us the early clues before the market catches on that, okay, you know, that's the end of the bear market rally. That's why I put out the video on Friday saying, okay, that's the top of tech. Look, it doesn't mean it that we can't. When I say something's the top, I don't mean it. I'm calling the top to the very penny. Okay, I really don't try to call the perfect move every single day. Like on Monday, the market will gap down, and this is the exact top, and you put your money in right now, and you'll never have to take on any losses. That's not how trading works. Okay. When I see a top, I see things indicating that we're near the top, that the upside's limited. They can continue for a few days to kind of grind it around. And again, that's that market maker action. Usually you'll see they'll grind it around and run stops. Okay, if we can do that, let's say you just grind around up here and kind of make these grindy, you know, little new highs here and there. Nothing really impulsive, but you kind of just keep making these little spike highs. Does that mean I'm wrong by saying we're at or near the top if it's followed by the next leg lower? No. All right. And that's how it goes. My channel, usually when I start calling tops or say that I think we're at or near the top, you know, it doesn't, you know, it can go on for a couple days or a week or so. And everybody tells me I'm wrong and this and that. This is just how it is. Every single time I'm at or near a top, I might be off by 5 or 6%. But again, it's impossible to call the exact top. I mean, sometimes you get it right, but I don't try to do that. What I try to do is I know this is resistance right here. I know I have negative divergence. All right. So I know this is close to being, this is a setup, a bearish setup. That has a higher probability of being near the top. I'm looking for a bearish PPO crossover. If I get that, that's helps shape that up, and then you just start looking for price to start dropping. Okay, guys, that's all I got. So I'm going to get